Early gains turned into losses fast today after opening gap with Microsoft and Meta pushing the market higher. Tech outperformed, but then the rest of the market cracked. We're going to break that down in tonight's video. Of course, if you want the full breakdown as well as today's trade idea, you get that at marketscholars.com in the link down in the description or the pinned comment below. The S&P opened strong here today and looked like it might extend, kind of break back out and extend this rally that we had until other headlines came in. Inflation, PCE today, healthcare got hammered, and we ultimately finishing the day down about, what, 1/3% here, giving up all these earning gains, filling in the gap on weakening breadth, no less. Big tech stole the spotlight, Meta breaking out big time with a big move. I already had been pretty bullish, but had been kind of consolidating before today. Nice surge over 11% on a strong earnings beat. And then you look at Microsoft, also rallied or opened up significantly higher, but actually gave up a lot of its gains. Still finished up 4% after giving up a large portion of its gains, which might not be the best pattern. The macro twist actually from this morning came in from a slightly hotter than expected core PCE, which came in on a year-over-year basis at 2.8%, reigniting concerns that the Fed will delay rate cuts, which helped push the dollar higher. You can see the dollar was up again. This is what, the 6th day in a row that the dollar is higher. And not only was the dollar higher today, but the VIX was also higher after starting the day lower, finishing up above the 17-day, almost its 30-day moving average here. This is a classic risk-off response to the headlines that we got today. And add to that the tariff announcements. Mexico got some relief from there as a push-off of their deadline, but not for South Korea. South Korea got hit with a 15% tariff on their EVs, and you can see it dropped it down 1% today, and giving us a little bit of a little bit of a bearish response, as you can see all across the board internationally. Japan, China, all kind of in conjunction with this weakness that we're seeing in one of the major Asian economies here. But even Europe is showing weakness all across the board, with Canada even giving us a bull tag, UK giving us a bull tag, and poor India and Brazil have just stuck in bearish intermediate declines. Before we get going on to the next segment here, if you're watching our video here on YouTube, if you scroll down to the bottom into the description, click this more right there, you can see the link to our blog post. If you click on that link, it takes you here. You have to be logged in. You have to have a free basic account to be able to view it. You just click on this button. It will go through the steps on creating that account. And then once you have that, you get access to the full post. And it's a pretty big post. You can see the preview video as well, a quick summary, some key market stats. If you want the full breakdown and trade idea, you can join our foundation tier for $29 a month, or you get 2 months for free if you do the yearly. So you can see all this content that's on the video. If you scroll down here, a lot of content about what's going on today, why it matters, how it's significant to you. So I've got it all on this video, as well as comments down and below. You can comment down here, and I can be able to reply back to any comments that you have. So check that out. That's a significant portion of the market outlook that I want to make sure everybody knows about and has access to. All right, so the advanced decline line finished negative again today. Not as bad, about half, but still, I mean, we've been so negative for so long that the 20-day average now has turned negative. We have more stocks obviously falling than rising. Breadth has been narrowing for really the last week, but the last couple of weeks, and that trend seems to be worsening and worsening. The number of stocks above their 50-day moving average dropped like a rock, dropped down below 300, way below its average, as that's really worsening as well. A big sign of weakening participation under the hood. It's interesting. You'd think that defensive sector utilities did very well, and so you'd think, okay, staples and healthcare. Nope, healthcare, real estate, worst performers today. Staples lagging behind the market as well, sitting there kind of right next to technology and discretionary. When cyclicals and defensives are going down like this, that tells us a risk appetite's fading fast. Volatility also jumped up higher. You can see the VIX continues to move up, kind of a bigger 8%, but remember that's only off of the close, it actually gapped down. So we had a pretty significant move on the volatility index throughout the day today, as well as you can also see the VVIX closing up close to 100 after a big dip in its correlation down to an important 50% level. And technically, the S&P 500 is actually still close to all-time highs. We did get a high, a new intraday all-time high today, but we faded and we're pulling back and we closed below that 9-day moving average. It appears that our momentum, which has been converging, looks a little stretched here. So what happens if this momentum fades further? Our trade idea is actually a stock that would take advantage of that, again, that you see in the full video. Today's action sends a pretty clear message. Surface level gains, especially from the Mag 7, can't hide the cracks that are forming underneath. And if this volatility sticks around and builds, it's going to create some pretty decent opportunities. As I showed you before, the full market outlook video is posted at marketscholars.com. You can get that with a basic subscription. You can get the full blog post with a basic subscription. You can get the full market outlook video that we do, 30 minutes long with the trade idea. We go through technical setups, we go through the macro and the market relationships, sector rotations. We go through all of that in a lot more detail and how I'm starting to position myself after how we've been trading for the past month or so. That's all available for our foundation members, for all of our subscribers, starting with our foundation members at $29 a month. Again, no ads, no noise. It's just data-driven insight and strategy from a real trader's perspective. Just check it out. Check it out down with the description down below in the link down below, in the description or in that pinned comment. Thank you very much for watching. And remember to subscribe to our YouTube channel, hit like the video, comment down below, share it with others. Follow me on Twitter and Facebook and all of our social media accounts. Have a great rest of your Thursday night, everybody, and we'll see you tomorrow.